A 952% return. Is that even possible, or is it just crypto hype getting out of control again? Today, I'm putting my own money on the line to investigate the SPK token. We're going to stake some cash and find out if this is a genuine chance to boost your portfolio, or just a cleverly disguised trap. Let's get into it. Hook. Section 1. The premise and the promise. You've seen the wild APY numbers floating around, sometimes in the thousands of percent. The latest one making waves is the SPK token, with a supposed 952% staking advantage. My first reaction, that sounds way too good to be true. And, in crypto, skepticism is your best defense. So, here's what we're going to do in this video. A completely transparent, step-by-step look at SPK token staking. We'll ignore the flashy marketing and get right to the facts. We'll go through the forces stock, power, Rohrstein, process together, calculate the real returns, and most importantly, talk about the risks they don't put in the headlines. Now, for the part my lawyer insists on, I am not a financial advisor, and this is absolutely not financial advice. Crypto is volatile and risky, so you should never, ever invest more than you're okay with losing. Always do your own research. My goal here is purely educational, to show you my process and what I find, so you can make a smarter decision for yourself. Section 2. What is SPK and why the hype? So, what exactly is this SPK token? It's the governance token for the Spark protocol, a major player in decentralized finance or DeFi. Spark is a lending platform that has deployed an impressive $3.86 billion in assets across various protocols. That's a huge amount of value locked in the system, and it has deep ties to the MakerDAO ecosystem, one of the oldest and most respected names in crypto, which gives it a serious layer of credibility. Owning and staking SPK gives you a vote on the protocol's future. But let's be honest, the main draw for most isn't the voting rights, it's the rewards. The tokenomics are critical here. There's a total supply of 10 billion SPK tokens. However, only about 20 to 25% of that is actually circulating, partly due to a recent 3% community airdrop. A massive 65% of all tokens are set aside for community rewards, to be distributed over the next 10 years. On one hand, that's great for rewarding users. On the other, it's a constant drip of new tokens hitting the market, which could push the price down over time. We'll circle back to that when we cover the risks. Section 3. The investigation begins, staking our tokens. Okay, enough theory. Time to see this thing in action. I'm going to walk you through how to stake SPK tokens right now. First up, I'm heading to the official Spark app at app.spark.8SPK staking. This is where you interact directly with the protocol. Once there, I connect my MetaMask wallet, a quick click and a signature request, and I'm in. I've already got some SPK tokens in this wallet that I picked up on an exchange. For this experiment, let's stake an even $1,000 worth. The interface is pretty straightforward. I can see my balance and a big stake button. I'll click that, and a pop-up asks how much I want to stake. I'm hitting max. Now, before the final step, I have to approve the smart contract to access my SPK. This is a standard security measure in DeFi. I'll set the spending cap and confirm it in my wallet. We just have to wait a second for that transaction to get confirmed on the blockchain. Alright, approval is done. Now I hit the final stake button. My wallet asks for one last confirmation showing the transaction and the gas fee. I'll confirm it, and there we go. Transaction successful. My SPK balance is now 0, and my wallet shows I've received an equivalent amount of STSPK, or staked SPK. That token is my receipt proving my position. The dashboard now shows my tokens are staked and earning Spark points. Section 4. The 24-hour wait and the reveal. Okay, our $1,000 worth of SPK is staked and doing its thing. The clock starts now. All those big promises are officially being put to the test. I'm going to let this sit for exactly 24 hours, and then we'll come back and look at the cold, hard data. Welcome back. It's been 24 hours, and it's the moment of truth. I've got the dashboard right here. After one full day of staking my $1,000 in SPK, I've earned a certain amount of new SPK tokens as a reward. Let's run the numbers. Based on what I earned in 24 hours, we can calculate the real annual return. The math shows an annual percentage rate, APR, of about 10%. If we account for daily compounding, that gives us an annual percentage yield, APY, of around 10.5%. Now, an 8-12% APY from staking is still pretty solid. You won't find that at a traditional bank, but it is away from 9.52%. So, what's the deal? Section 5, the analysis. Where does 9.52% come from? This is where you have to read the fine print. That 9.52% figure isn't exactly a lie, but it's marketing with a very clever and misleading twist. It's a theoretical number that bundles a few different things together. First, you have the base staking yield. Our test showed around 10%, and across different exchanges, the base rate fluctuates, but this is the ballpark. This is the only direct reward you get paid in more SPK tokens. Second is the Spark Point system. When you stake, you earn points, and the platform advertises a yield multiplier through this system. But these points aren't cash or tokens. They're a way to boost your share of future airdrops and other rewards. They have potential value, but it's speculative and definitely not immediate cash in your pocket. Third, and this is the biggest piece of the puzzle, token price speculation. The SPK token has had some wild moments, surging 75% overnight and over 250% in a week at certain points in its history. If you staked your tokens and the price of the token itself happened to shoot up by 900%, then yes, your total investment would have seen a nearly 1000% gain. But that's not a staking reward. That's just the market being the market. Mixing staking APY with token price performance is a classic crypto marketing trick. Section 6, the hidden risks they don't advertise. So the real yield is around 10% APY plus some speculative points. Now for the other side of the coin, the risks that the flashy ads conveniently forget to mention. The biggest one is token volatility. That 10% APY is paid in SPK tokens. If the price of SPK drops 50%, your 10% gain is gone. In fact, you'd be down 40% on your initial investment in dollar terms. Those price pumps can go in reverse just as fast, with some analysts in early 2026 predicting prices could fall to 0.02. This risk is very real. Next is a risk that can turn a bad situation into a nightmare, the unstaking period. You can't just pull your money out instantly. To unstake SPK, you have to wait for a 10 to 14 day cooldown period to end. Think about that. If the price starts to tank, you are forced to just sit and watch your investment shrink for up to 2 weeks before you can get to it. Then there's the supply dilution. Remember that 65% of the total supply hitting the market over 10 years. That creates a constant, steady selling pressure that can hold the token's price down. Your 10% APY is in a constant fight against this token inflation. Finally, there's standard smart contract risk, the chance of a bug or an exploit in the code that could drain the funds. While the Spark team is reputable, this risk exists in every single DeFi protocol, no exceptions. Section 7, the verdict, portfolio booster or overhyped fantasy. So, after laying it all out, what's the final call? The 9.52% claim is, without a doubt, a fantasy. It's a marketing gimmick that works by blurring the lines between real yield and speculative market hype. But that doesn't mean SPK staking is worthless. The reality is that the protocol offers a competitive double-digit APY that is still very attractive. The project's fundamentals are quite strong. It generates real revenue, estimated at an annualized $10–15 million, which can be used for things like token buybacks. It has a massive amount of assets deployed and the backing of Maker Deo. These are real signs of a project with long-term potential. Here's my take. SPK token staking is a high-risk, high-reward move that might fit in a small, speculative slice of an investor's portfolio. It is not a simple portfolio booster for beginners. The risks, especially the price volatility, combined with that 10–14 day unstaking lockup and long-term token inflation, are no joke and cannot be ignored. Staking SPK isn't a set-it-and-forget-it passive income stream. It's an active bet on the Spark protocol's future success. If you believe in the platform's growth and can handle the gut-wrenching volatility and lack of immediate liquidity, it might be an opportunity. But if you're looking for a safe, steady portfolio boost, this ain't it. The fantasy is a risk-free 9.52%. The reality is a complicated, risky, but potentially rewarding bet in the wild world of DeFi. This is the kind of clear-eyed analysis we do here. If you appreciate cutting through the hype to find the real story in crypto, make sure to subscribe and hit the notification bell. Now I want to hear from you. Drop a comment below if you've tried high APY staking with SPK or any other token. How did it go? Did the reality live up to the marketing? The comments are where we all get smarter. Thanks for joining the investigation. Stay safe out there, and always stay skeptical.